Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I'm your host, Ashutosh Garg, and today I'm delighted to welcome a very, very senior, accomplished, and well recognized professional from the world of finance from Mumbai, Pune, Mr. Ninad Karpe. Ninad, welcome to the show.
Thank you. Thank you. Delighted to be here and delighted to share my thoughts.
Thank you. Ninad is the co-founder and partner of 100x VC, which is a VC firm which invests in early-stage startups using iSafe notes and aims to invest in 100 startups every year. Ninad is also an author, and all of you know I am very, very partial to authors. He's an author of a book titled Bond to Baba, and we'll talk about his book. And interestingly, Ninad is passionate about supporting theater and has co-produced 2 Marathi plays. So Ninad, from fintech to author to theater, tell me about your own journey in brief before we start talking about 100x VC.
As Shakespeare said, life is a theater.
Absolutely.
So, yeah, I think, it's been a good ride. Theater is a passion. I think all of you should come and watch live theater. There's nothing to beat the excitement of live theater. I'll stop at that. Other than speak for the next 1 hour on theater itself.
Absolutely. But what got you started as a VC? Tell me a little bit about your earlier journey before you became a VC.
So before VC, I was almost 20, 21 years in the corporate sector, 7, 8 years as managing director of Aptech. It's an Indian listed company in education space, operations across the world. And before that, 13 years, I was MD of a software vendor, a company called Computer Associates, CA in short. It's a US company.
Yeah.
And that gave me corporate insight. Before that, almost 13 years, I was a professional, as in I had my own consulting. Now, having done this diverse kind of roles, the next step was what? One is, of course, the passion profession, which is theater, but one is a mainstream profession. And VC seemed to really fit the bill in the sense there are people like us who have run company, people like you, those who have run companies. And when you become a VC, you're called an operator VC, where you actually run businesses, and it's not just an asset management experience.
Correct.
Nothing right or wrong. Each one brings particular skills to the table. But operator VC, so to say, with this kind of experience, and you have much broader experience as well, having been on boards of a lot of companies, the perspective you get to running a VC fund is a different perspective and flavor. So 5 of us co-founded this firm 100x. The idea of investing in early stage startups in India only, with a new model called iSafe model. I won't get into detail. It's all there on the website. But the whole idea was to take very early bets. So we have funded 105 so far, and we are in the process of finalizing our next cohort of 25. We fund at very early, which is sometimes even at a concept stage. Out of 105, a couple of them, 3, 4 of them didn't even have product ready. That takes a serious element of risk.
Correct.
The reason I thought I could bring all my experience into figuring out how to help the startup scale their business.
Very interesting. And, when I was reading about you while preparing for our conversation, I was wondering, how do you decide? Because you're talking 100 startups every year, and that's a huge amount of effort. How do you decide which startups to invest in, and what do you look for when you look at founders?
You want my secret sauce?
Absolutely.
But I'm happy to share it. As a firm, we get roughly 25 to 32,000 pitch decks every year. So that's a lot of pitch decks. That's also an indication, and this number growing every year over the last 3 years. That's also an indication of the fact that young girls and boys are wanting to do startups. Now, there is obviously we have a couple of parameters, but at the end of the day, it's the risk taking ability. And firstly, we look at products or services which have large markets. If you're doing, multi-grain bread for very expensive South Bombay, nothing right or wrong. It's not, of course, a large market. We want to target something which has got a large market. We want to target a market which has got growth, huge growth, not just 3%, 5%. It has to certainly be in double digits. We figure out this concept or business or MVP, does it have any moat? It could be anything. It could be a new business model. It could be new technology, anything. And most important is the founder. Is she or he, in our assessment, able to become a successful founder? And at the end of the day, we are looking at 100x returns. That's why the name of firm is 100x. Obviously, every investment will not become 100x, and very few will become. But that's what we look at. So these are very broad rough parameters we look at. And then there's weightage internally given to all of it.
Absolutely. And normally what I have seen with a lot of VCs is that the process that is followed is slow and time consuming. With 25 to 30,000 decks coming to you every year, what is the process you follow from the time you receive a pitch deck till the time you either invest or say no?
It's fast, very fast. Within 7 days of a person submitting the pitch deck on a website, we say we will respond to you. And that response could either be saying, we pass, we're not able to invest at this point of time, or actually we straight call him up and call for a meeting. And at the meeting, actually our process is quite standard. We don't have a detailed shareholder agreement. We don't take directors' seats, board seats. It's a simple document called ISAFE, Simple Agreement for Future Equity, whereby we invest, standard amount of 1.25 crores for a 15% future equity. It's a standard 4-page document. Everything is the same. There is no individual discussions on valuation. So it has happened out of 105, maybe around 10, 15. We call them in the morning. We say, you check our document. It's on our website. Come only if you're ready. And evening we sign off.
Wow.
So just yesterday, as an example, these are young kids from IIT. I won't name which IIT.
Absolutely.
And they're in the final year. So we liked it. And they pitched to us. They don't even have product ready, Ashutosh. But we liked it. We liked the founder. We said, okay, here's the term sheet, sign it. So they were taken, this is too fast. So it can move as fast as that as well.
Amazing. The other question that I've often asked a lot of VCs, and I'm going to ask you the same as well, what is your process of mitigating risk? Other than, of course, you're saying that I've got 100, so some will do well, some will not. But as an investor, how do you mitigate risk?
I don't think we even attempt to do that.
Okay.
Because we are in the very, very high risk zone. And Ashutosh, the way we decide is investment is typically any person giving money to another person will think of what can go wrong. And that's how the risk mitigation. We think exactly the flip. I flip the coin exactly. I say, what can go right? If this idea goes right, what can happen to my investment? So, we don't take board seats. We of course have some terms. Obviously, money can't be given without any terms. But it is really such a high risk game we are playing at such an early stage. Very tough to mitigate risk. Very tough.
Interesting. And for my viewers and listeners, would you be able to share, 1 or 2 or 3 of your incredible successes?
So we are still early. Life of a VC fund, unless it's done 7 to 10 years, you don't start judging success. We are just 4 years old. But yeah, some early signs is just last evening, in fact, it's in the papers today. One of our investor company called PickRight was taken over by Nuama Wealth, which is part of, had spun off from Edelweiss. One of our class 1 companies called Smiles.ai raised a fund of raised $26 million, within 3 years. That's a big amount. One of our company called Kerala Banana Chips, doing simple banana chips. When he came to us 24 months back, he was just doing 2 lakhs a month revenue. Now he's doing 2.5 crores. So these are early signs, but it's too early now to say that we are successful or we are not successful.
Understand. But the other thing that I've often seen with VCs, Ninad, is the knowledge of different sectors. And you seem to be in multiple sectors. How do you manage to keep yourself contemporary with the different sectors that all your investments are in?
Yeah, it's tough. I think that the challenge is to have a broad enough knowledge, enough depth to figure out each of these sectors. The macro trends is what we keep, seeing all the time. Beauty of our profession is every day 3-4, people come and when they pitch to us, obviously we learn more about the segment.
Correct.
So it's a learning process for us as well. But yeah, to keep abreast of developments and not see the dots. Everyone sees the dots when you read about it, but to connect them is what, as a profession, we have to do.
Very interesting. My next question is, I would love to get your perspective on how is the venture capital landscape in India changing? I mean, it has changed dramatically since the time I raised private equity in 2008. And now people start saying this is the winter period of VC. So as someone who is investing consistently or continuously, what are your perspectives and how is this whole landscape changing?
So I still think our VC industry in India is still quite narrow in the sense of number of people engaged in the industry. And it's nascent compared to, let's say, the US or even China. We are still quite narrow. And the reason is we have probably started late. It will pick up very fast. There is obviously some element of reality check in terms of investment decisions, particularly at the later stage, Series B and C, where people are now looking at things more in depth, and I think it's a kind of a corrective pattern which is happening. It's good for overall the industry. We are at very early stage, first check, concept, early revenue, pre-revenue. We still see a surfeit of a lot of action from both sides. The number of pitch decks we're getting, and also people willing to take the risk and bet at early stage. That space is still, people are writing small checks, angels are writing 10 lakhs, 15 lakhs. So they are still okay to take the small risk. But certainly at the later stage, there has been some bit of reality check which has happened.
Very interesting. My next question is on what sectors are hot today. I mean, tech has always been very hot. Agri became very, very hot in the last few years. What are some of the sectors that you are seeing which are very, very hot and that you may be bullish on?
So agri-tech, we still believe is a lot more to be done, particularly in the first mile. On the last mile, a lot of good things have happened. But in the first mile, still many things have to happen. Health tech, we have seen a lot of startups, but still there is scope, we believe. Fintech, there has been, all kinds of stuff happening. Now the impact of pure deep tech onto various verticals, now with so much happening in the AI front, the industry is getting impacted. So we are not seeing as many deep tech companies as we would like to see. And we are willing to fund itself. So we have funded some deep tech companies, but I believe one is in terms of vertical. Agri-tech is still, since it impacts so many lives in India, it's still a lot to go. And deep tech also has a lot more potential.
And now, do you see any challenges being faced in the startup ecosystem in India? Or do you think it's just all hunky-dory, 75,000 startups and continuously growing?
There are, Ashutosh, startups. As a fund, we fund only Indian startups. We don't fund startups which are registered outside of India because, we have taken a view that we want to be with Indian jurisprudence and Indian geography and Indian, legal and ecosystem. But there are others who look for other geographies to register, and they feel that is much easier to do it. India does have its own set of challenges, but I think there's nothing which is insurmountable, or nothing which is the challenges are so big that you shouldn't have a startup in India. And we still feel bullish about it. Whether it's some tax issues which you read about in the budget, whether it's some compliance issues, there are some. I mean, it's not that there aren't. We kept hearing of angel tax. They've, expanded the. But these are things not substantial to my mind for the opportunity there is in India.
Interesting. And at what stage? I know it's very early for you also. It was only 4 years, but at what stage do you look for an exit, or at what stage will you look for an exit?
So ideally, we would hold for at least, we are in no rush. If the startup is going to take 10 years to become big, we will hold for 10 years also. But I think the stage at which we invest, my guess is, if it hopefully some of them succeed, my guess is 6 to 8 years kind of time zone would be the probably the time zone where we would probably need to exit. So we are okay to wait till 10, but between 5 to 8 or 6 to 8 is the time zone one would think of exiting.
And a little while back, you had mentioned that you write out a check for 1.25 crores for 15%. Is that something standard, or does that keep varying?
So we have curated this model now. Earlier, for the first 80 startups, we wrote 25 lakhs for 7%. And it's a future, so we do not get equity in return. It's for a future convertible. It's a convertible note. Okay. So it converts only at a trigger point in future.
Right.
Irrespective of the valuation at that time, whether it's 2 crores or whatever crores, we get a fixed 15%.
Okay.
So then from 25 lakhs, we have recently, after the first 80, we figured that it's probably better to give more money initially so that they have some runway of 12 to 24 months at least. And I think it's working out well because 1.25 crores for a very early startup,
it's a lot of money.
A lot of money. And these founders are very agile with their money.
Absolutely.
And they can, so this 15%, we do not get immediate equity. It's a future convertible.
Well said. I'm now going to move to your book, Bond to Baba. And before I ask you about the book, I'm going to ask all our viewers and listeners to go and check out Mr. Ninad Karpe's book on Amazon. I will go and check it out myself. But, when I was reading about this, I was wondering whether you were referring to James Bond or the financial Bond. Baba, I had some broad understanding, but tell me about your book.
So this was written over a period of 7 years and just 120 pages. So my younger son said, "Dad, that's such a poor progress of writing." I said, "What to do?" But it's condensed writing. So fundamentally, my experience in running companies, and the whole theme is actually reinvention, how to keep reinventing. The first chapter is on James Bond. I saw Skyfall, and I was so taken aback by the way the Bond character was reinvented. And I have connected that reinvention to how companies need to reinvent. And then there are various chapters on Formula One, various things in between. And the last chapter was on Baba, Baba Ramdev's business forays. And I was sitting with the publisher thinking of a name. He said, "No, reinvention sounds very drab." And say, "Your first chapter is on James Bond. It's like last on Baba. Call it Bond to Baba." That's it. So that's how it came up. So it wasn't a deep thought. The whole book is on business strategies and how to reinvent.
That's very interesting. Very interesting. And For someone who was in the corporate sector and wrote a book on reinvention to now someone who's in the private equity or venture capital space and is not probably looking at pivot, is there a relationship between reinvention and pivot?
There is. I think pivot is a new word and a good word, but reinvention has been in the management theory and practice for a long time.
Correct.
It's pivot gives a slight sense of urgency, a slight sense of agility. Reinvention has slightly a sense of, okay, let's do it in a planned manner. But both essentially mean the same thing.
Well said. And my last question to you, Dinad, and this is for the thousands of people who will listen to our conversation. Based on your incredible journey and now funding so many startups, what would you say are 3 lessons you would want our viewers and listeners to take away from your own knowledge and from our conversation?
I think number one is have a passion profession or some passion other than your mainstream profession.
Yeah.
Presently I am seriously into theater, but I've always loved watching Formula One races. I've really, really passionately followed them. I've learned wine making, wine tasting. You have to have some passion other than that. Second is, I think reinvention is very critical. The way the world is moving, if you don't reinvent yourself constantly, whether you call it pivot, reinvent, not just business, but you personally. You have to personally reinvent. And last is never too late to start your startup. You have all seen the story of Naika, how she started Falcon at a very different age. She is not the atypical IIT girl who started at age 21, 23, but it's never too late.
Correct.
It's exciting. It's great. Just get going. Remember, today, capital is chasing ideas. And it's not the reverse. Ideas are not chasing capital. So if you have a great idea, you will get funded. If you're not getting funded, that means there's some problem with the idea. There's no problem with the capital. If capital is chasing ideas, you must do something at whatever age. Start something. And since this thing is about me, I'll tell you one small thing before you wind up. I'm very passionate, Ashutosh, about pocket squares. I love them deeply.
Okay.
I thought, let me convert that passion to business. So I made my own brand called Karpe DM, spelled K-A-R-P.
Wow. Okay.
And for almost 2 years, I had 8 designs made, and I sold them on Amazon. I've sold more than 2,500. So there was no store. I only had the IP, my design. Everything was outsourced, from printing to customer delivery. I had nothing, just the idea.
Amazing.
I had passion. I converted to business. It's still there on Amazon, Karpe Diem. There are very few, 50 or 50 left. So there's nothing to stop you. If I can do it, just a thought, and convert it to a business, there's nothing to stop each one of you. All the very best.
Wow. And on that note, Ninad, and your 3 amazing lessons, which is have a passion profession, so critical for everyone at every age to have this. Second, you said was reinvention is critical. Keep reinventing yourself constantly. And number 3, you said was never too late to start. But I think your $1 million comment at the end of it all was, if you've got a good idea, there's always money available. Money is chasing ideas. Thank you, Ninad, for talking to me about your own journey, about 100x VC, about all the amazing stuff that you're doing to be able to support so many startups in the country. Thank you also for speaking to me about your book, Born to Baba. Thank you again, and good luck.
Thank you. Thank you for inviting me. Happy to share my thoughts. Thank you.
Thank you for listening to the Brand Called You videocast and podcast, a platform that brings you knowledge, experience, and wisdom of hundreds of successful individuals from around the world. Do visit our website, www.tbcy.in, to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the brand called you.